What's good, YouTube? Welcome to another day in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you would like to join my community, make sure you click the link in the description below. Today, guys, we are going to be looking at how to backtest. Now, everyone has different ways to backtest, but this method that I use is good for beginners, is good for people that don't want to pay to backtest, because I know a lot of people sell softwares to backtest, and I personally just believe that backtesting is just a way to train your eyes. I don't believe that you should be backtesting with the replay bar tool. You can if you would like, but that's a completely different method of backtesting. But today I want to just show you how you can backtest to train your eyes to see what the market is doing and working on your strategy. Okay, so for me, I have around a few strategies: a double bottom, double tops. I have candlestick pattern strategies. And so I kind of mix everything together. If you've seen all my strategy videos, you would have put all of it together and put it into one. So today what we're going to do is we're going to do a little backtesting session, and I'm going to show you guys exactly how I backtest to train my eyes to become a better and profitable trader. So what we're going to do, we're going to look straight into the screen, and what we're going to do, we're looking at AUD/USD today. And usually what I like to do is I'll go onto the weekly time frame or the daily time frame, and I want to just get myself, let's say I'm a day trader, so I want to get myself on a day that, or any day to be honest. So what I would do is I would highlight a day. Let's just say I want to do as close as possible, so I'm getting enough data for myself for that day. So let's say, for example, I highlight this day right here. This is totally random, guys, as well. So we're going to actually do a whole back testing session. So we highlight a day, and I'll scale into a lower time frame. I'll scale into a lower time frame, and I'll actually have a look and see what went through throughout this day. And so we're not going to analyze the charts. We're going to train our eyes and see what happened on this day and how we would have entered, or what we could have done to enter. So what I'm going to do is just make this super like this. Boom, 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 boom. Like full time. There we go. Like this. So this is our area that we want to look at. And the reason why I do it like this, guys, and I don't use the replay bar tool, is because if I did do the replay bar tool, first of all, you got to pay. And second of all, is I like to backtest, and I like to use different time frames. Now, when you're using the replay bar tool, you can't use different time frames because that candlestick is already formed. So when you're scaling into a lower time frame, you've already got the candlestick kind of formed, and you might see a delayed entry or delayed exit, whatever it is. And so for me, I like to do this method. Now, a lot of people are going to say that this is not the right method and you shouldn't do this. But guys, I'm gonna be honest with you. When you backtest, what is the main purpose of backtesting? Number one is either building data. Okay. Number two is to train your eyes. Now, this method of backtesting is to train your eyes. I believe that in order for you to prove to yourself that you're a good trader, is not by backtesting, it's by forward testing. And forward testing is trading in the now. Now, you can practice with backtesting and practice training your eyes and seeing how the market moves. But the only real test is when you're forward testing and you're actually testing your strategy on real live data. Because anyone can backtest for a whole year. You know, I backtested for a whole year, and I can show you great results. But then when you trade in real life with all the emotions, and you feel, you know, different psychology levels, and it's a completely different day, you will notice that it's very different environment to backtesting. So I don't like to backtest to build data, but I like to backtest to train my eyes and tell myself if my strategy is a good strategy. So when it comes to this method of backtesting, there are a few requirements. Number one, you have to be real with yourself. You can't backtest this way and just go whatever the flow. You have to be real with yourself and say to yourself, would I have traded here? If I did, would I have succeeded? Would I have not succeeded? Why wouldn't I have succeeded? Or why would I have succeeded? And why the market moved in this direction? Like I say in all my videos, guys, you are not determining where the market is going. What you are doing is just rolling with the flow of the markets. You can't tell the markets to go up. You can't tell the markets to go down. Now, replay bar tool is great. It is an amazing tool. And other people that got softwares out there, and I've used all the softwares that are out there on the internet, I just feel like this method is the best because we actually trade with these charts, and I like to use this method to really show me what's actually going on within the markets, okay? So we highlighted an area. I want to only look within this area. Obviously, I can look at the past. I could look at, if there's area of interest in within the past, but I would like to see this area and see exactly what's going on. So for me, we can see that price has gone up and has created a downwards push. We could already see that we were on a downtrend anyways. So I'm going to scale in straight away in the hour. That's where I like to do my analysis. And I'm going to start to see what actually happened. So today started and we'll actually go. I don't know what day this was. Was it a Tuesday or, well, this is going through 3 days. I'm not too sure. Was it? Okay, let's do this. Let's go from Monday morning. So Monday morning, right here. Monday morning, this candlestick right here. It starts at this candlestick. As you can see right here. So we're including this data all the way here. And then we'll go all the way to Friday. Let's do that. So that we have a week worth of back testing to do. So Friday, boom, boom, boom. Okay, we're going to Sunday now. There we go. So we'll just stop right there. Okay. So cool. This is what we're gonna back test. And we're gonna now, and I'll probably just lock it so that it doesn't move. Okay, there we go. So now what I want to do is I want to understand what's going on with price. So first thing first, I want to have a look and see, okay, for me, when I analyze, I need to get some key levels on the chart straight away. I can't trade without key levels because I feel like everything's just rolling with like water. I want to have set levels, set area of interest that the market could be going towards. So in this area, well, where this high is 0.65. So I'm probably just going to put 0.65 on the dot right here. Below that would be 0.6, would say 0.64. 0.64. And in between that, we could get 0.63, but in between that, 0.64 500. That's in between both of them. And that would be the mid-level. And with me, I don't really like to have too many key levels. 3 key levels is enough. Okay, so for me, I look for my entries have to be near around psychological numbers. So I would have most likely entered, and just want to put this at, let me just apply defaults. Okay, black. Sorry, I have this OCD where it has to look a certain way. There we go. And so I would have probably entered around this area right here. So I'm going to scale in to this area right here because price has come down right here. And then price has pulled back. And because we're on a downtrend, this is the area of interest, right? And I would actually say this is the area of interest right around here. So for me, I want to look for an entry right here. So this is where I'm going to enter. Why? Because price has obviously had a great push. We had the breaker structure. We're looking for a retest. So that's number 1 entry. Number 2, I can use the Fibonacci tool and actually locate a good entry, which is near my 78.6. Not exactly, but I think that if we scaled a little bit higher to the highest point of this move, we can see that it respects nicely at our 78.6 zone right here. But obviously, we're going to just keep it fair and square. Now, I have an entry protocol that I have. So I'm going to scale into this and see, is it a double top? Is it a place where I could have entered? Well, have a look at this. So we had a bullish. Now, I like to always enter either at a double top, head and shoulder pattern, or a candlestick pattern. So for me, I could see right here, this probably on a 30, 45 minute time frame, this could have been an evening star. And also, I already know that price could potentially form some sort of retracement back. Okay, so we didn't actually get that move right there. We didn't get a double top or double bottom, right? Even though price did kind of do like a double top right here, top here, but we didn't really get that. Okay, but this is a good indication of where I could enter. Okay, watch this, guys. Okay, so now we see price come down, down, down. Now look, we had a liquidity sweep right here. Okay, now when we see a liquidity sweep, first thing I'm looking for is that break of structure. So the break of structure will be here, down here. So we see the break of structure down here. break of structure. Okay, now I've seen the break of structure. I know we liquidity swept. We've seen the break of structure. Next thing that I'm trying to do is look for an entry. And boom, look what you guys see, right? So what we can do is we can actually use our Fibonacci retracement tool. Boom, look what you guys can see now. So two tops right here, two, okay? At this area, two tops right here. So for me, that's a double top right here for me, okay? Double top, price rejected once, most likely reject twice. I would enter at the Fibonacci levels is not as accurate for me, so we'll just leave it. But you can see we had the breaker structure, we're going for the retest. We clearly got the retest right around here. Price started to slow down, we saw a bearish engulfing. And if we scaled in to a lower time frame, we would have seen, sorry, if we go back to the 1 hour time frame, if we scaled into a lower time frame, we probably would have seen some sort, yeah, there we go, evening star retest, right? So this is where we are. We'll probably most likely enter around this area right here, evening star, enter around wherever this retest is. So scaling back, we see that evening star. And this is why I like this method. Even though it's very fiddly, it's very, very good to see if your method works. Evening star came, we saw that little retest right here. Price obviously comes back, retest, probably enter within any of the zone right here, anywhere between here. Most likely for me is a bearish engulfing. I like to always enter at a bearish engulfing. For me, a bearish engulfing happened right here. Short position, stop loss just above these highs, targeting the next level, which is here. And that gives me a nice 1 to 3 whistle ratio, which this is a trade that I would have taken. Now this trade happened on Wednesday, so most likely I'll be done for the week, right? Because 1 to 3, pretty good profits, okay? And then that's how you backtest, guys. So now I've practiced this, looks good. Let's continue. Let's actually continue. So we had a break of here and we had a retest. Again, cool. Another entry model right here, straight away, right? Break. We had the break and the retest. Break and the retest. 15-minute time frame. Okay, cool. Retest. Not only that, we had price, did a whole liquidity sweep. Okay, so I would probably enter, remember, these are all probabilities, okay? Probably enter right around over here, stop loss just above here, targeting again, my 1 to 3, which is the next key zone right here. That's 2 trades within the week where we would have had profitable trades. Now, again, I would always try and be realistic with myself. So like, for example, here, I probably would have entered. It looks like a double top to me. So I would have entered where it's trying to retest here. We never got that bearish engulfing candlestick, so I would have just missed it. And that's why it's so important, guys, to understand where you would have got, where you enter, right? For me, I'm always entering at an engulfing candlestick. I'm never going to enter where it's like doji, 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 doji. Because this right here is just telling me price is hesitating. We don't know what price is doing. That's all it's telling me. When we see an engulfing candlestick, that's why it's like, okay, we're definitely going in that direction. So we're going to continue. Now, again, this level here is very much respected. We can see we had a double top. So for me, okay, I'm waiting for price to break. Okay, we get that break. We're coming for the retest, retesting. And do we get to see a bearish engulfing? Well, I believe that this is a bearish engulfing. And remember, like I said to you guys, we have to be real with each other, right? Put my stop loss just above over here, targeting down here again, right? Or 1 to 3 whistle ratio, whichever one. I like to just have the sweet spot of 1 to 3. You can see that immediately price ends up going into profit and then we're getting stopped out. So that right here, truthfully, that would have been a trade that we would have lost. And that's on a Thursday. And so with this week, do we get to trade on a Friday? Well, with my data, I realized that Fridays and Mondays are like my worst trading days. If I see an opportunity, I would trade. You can see over here, price ends up breaking these highs over here, but still respecting this level. I need to go back onto the 1 hour. It is very fiddly, guys, but it's very good to build the data. Okay, so you can see on the 4 hours, on the 1 hour, I would have actually never entered this trade. Obviously, I'm just giving you an example, but I would have never entered this trade. This is full on dojis. But just for example purposes, you can see now prices come here. We see that break of structure. Cool. Break of structure happened here. I'm just going to... Break of structure happened here. With me, I like to break and retest. So we got the break of structure, price ends up retesting, right? Price up retesting not once, but twice. I most likely would have just entered on the first retest. So the first retest right here, boom, boom, stop loss above previous highs. So if I'm entering here, previous highs will be here. Targeting, this is a low target, so I'll probably go for the next level, which will give me a 1 to 3. Okay, so which is right here. And as you can see with this trade, even though it looks so good, I would have lost this trade. Okay, and so this would have ended up going for the next week as well. But let's just say it's a loss for this trade. So with this week, and I would like to write this down as well. With this week, we had 2 wins and 2 losses. Okay, and so 2 wins equals, I think it's 6R because it's 1 to 3. And 2 losses, so minus 2R equals 4R profit. So within this week and my analysis, I would be profitable. And so I do this every single, like I literally mark out areas and I do this every single week, guys. Like I literally, if it's the weekend, I like to play around with this. So like, because I'm more experienced now, I don't have to do this all the time. And I have enough data to tell me that I'm profitable. And I've trained my eyes because I've been trading for 5 years, guys. So for me, this is like a normal session for me. For obviously for you guys, it's a learning curve. For me, this is like, you know, it's like I'm experienced. I like this session, okay? So for me, this is like, okay, my trade in my analysis is 4R, cool. I'm profitable. I would have been profitable that week. This is the week of Sunday, the 1st of December. So this is literally the 1st of the month. I would have been profitable in this month. Simple. Why? Because I use my protocols. I use the way I trade. Simple, simple, simple. Okay, it's literally like this, okay? So now it's like, but obviously I have a more in-depth strategy, and I don't want to confuse you guys with strategies, but we just used a break and retest strategy for this. Literally break and retest, break and retest, break and retest. You can see a simple strategy like that still works. And you can back test, and you can literally like remove 6 drawings like that. We could literally go for another week, find like another week. Let's just go for like a random, let's go for somewhere like October maybe. Because you don't want to go too far back, but let's go for like this week right here. Right? Let's go for this week. Okay, this kind of stick right here. So we're going to the 2 hours or the 1 hour. Really want to just make sure. Okay, what I like to do is just literally, boom, make this big. There we go. There we go. And so this is Sunday. Monday, we are starting off up here. And obviously this ends on Sunday, literally. There we go, okay? Oh, that's Friday, 3 p.m. And literally you could just do this and continue. So look, over here again. Simple. I don't even, sometimes like you don't have to draw the key levels. I'll probably just draw it again. We'll draw a key level. So key levels here, let's just do 0.67. 67. Boom. And then possibly do another one, 0.66. I think 0.66. Oh, no, that's 0.6. 0.66, there we go. And possibly even 0.665 right here. So we drew our key levels. Right, boom, boom, boom. Simple. We want to analyze within this area. Why did the market do this? What's going on? How do we get this, right? So cool. I like to do the break retest. So we clearly see right here, we had market building some sort of structure. We had a clear break of structure right here. Clear break of structure. And this is actually the 2 hour time frame. Clear break of structure right here. Break of structure, probably even scale into the 1 hour. Right. Remember, for me, I like to do my analysis. I'm a day trader, so I'm going to do my analysis within the time frames that I use. So we had a breaker structure right here. I'm going to draw an area around this area right here. Now look at this, guys, okay? And you have to be truthful with yourself. You can't not be truthful with yourself. You have to be truthful. So we had a breaker retest. We saw price come up here. Cool. We then scale into the 50-minute time frame. And this is where you now have to be honest with yourself, right? So we saw the break of structure. You saw that it took quite a while for the structure to be broken, but it ended up doing it. Okay, we're on the 50-minute time frame. We're looking for entries. We see the break of structure. We're looking for entries within the zone. We almost got an entry. We didn't. We end up seeing price doing a nice rejection right here. And then, price is started to move down. We saw that clear press push to the downside. Okay, now cool. For me, it's like, okay, cool. We would like to enter. So we enter at this bearish engulfing, stop loss just above here, and targeting 1 to 3, which is nice at this key level. Now this looks like a good trade, right? I like to go for 1 to 3s. I could go for more, but let's just say, for example purposes, you can see what happens. We end up losing this trade. We hold this trade for quite a while, actually. We end up losing this trade here, okay? So for me, obviously I have exit protocols as well, but we're just backtesting, we're just building data. It's not real, so it's not deep. So for this example, you can clearly see we had a really nice break of structure, retest. Clearly just wasn't our move. Clearly there was something else going on. And so we continue to trade. And so now we're seeing that we're still bearish though, right? So now we're like, okay, cool. We got highs over here. If price gets to these highs right here, then we'll probably sell again. Okay. And look what happens. Price, and I put a zone around here, right? Boom, boom, boom. Boom, boom. Look what ends up happening. We end up tapping back into that zone. We were close to this zone here. We end up tapping back into that zone. This is the liquidity zone though, right? So now I'm like, okay, cool. Let's have a look for entries. And bear in mind, this is a 50-minute time frame. What do I see with this entry? Well, I see left shoulder, head, right shoulder, like kind of like a head and shoulder pattern going on there. Okay, so cool. For me, it's like, okay, cool. We had a tweezer top here. We had price come back up, retest. I'm probably going to enter this trade. Tweezer top is enough for me to tell me that we could potentially go downwards. So for me, it's like, okay, cool. Probably enter after, you know, these bunch. Remember, I am not up at 4:45 a.m. as well. Make it realistic with the time as well. So I'm not up at 4:45 a.m. So probably enter after this, because I probably woke up around here. So we see that break. Boom, boom, boom. Another break of structure. Break of structure. So we're going to wait for the retest, which it did. Retest, and look at the retest. Double top at the EMA. What an entry. Amazing. We will enter for a sell at a bearish engulfing or bearish candlestick. So 1, 2, probably just enter right here. Stop loss just above here. Take profit all the way down to the next zone, which is here. This is a 1 to almost 3. And you can see we basically hit. Obviously for this one, price is coming down to the zone. You just want to take profit. It's at the zone. Take profit. This would have been a trade that we were profitable in. Okay, almost a 1 to 3. Probably would have just entered like around here. That gives us that 1 to 3 right here. Simple, guys. Okay, so but you want to be truthful yourself, right? And remember, guys, this is not data to tell you if you're a profitable trader. This is to train your eyes to see things. So if any of you are screaming at me right now saying, but you're adjusting the thing, you're doing this is not real, guys. So this is how you have to backtest. This is how you have to learn. You're going to make mistakes. You want to rectify them here and not in the real charts, okay? So if you can't afford to replay bar, if you can't, and I don't pay for TradingView, not because I can't afford the replay bar. I don't pay for the TradingView because I don't need to do that, right? But I do usually have, an account that I pay for, and that's for when I'm trading in depth or I'm going in a scalping session or something like that where I can scale into lower time frames or have like multiple screens, right? But I tend to not have the replay bar tool. I don't use it is because I want to train my eyes. Day trading is about training your eyes into understanding what the market is doing and reacting when the market does the same thing it's done in the previous time frames or previous time, right? And so for us, all we have to do is just keep on playing this game. Keep on playing this game until we become better at it. Okay, literally until we become better. Even if I didn't close a trade here, with this trade, you would see, with this trade, you can see it's going to close. Yes, this is a long, super duper long trade. We got in it on Monday, ended up on a Wednesday, but like we would have probably had a better entry anyways around here. But like you're gonna notice that your trades, now you know that, okay, cool, so on this trade on AUD USD, most likely I might be holding my trades for 3 days. Now you know that because you've seen the pattern, you've seen the trades, you've seen how it goes. And then again, you can literally do the same thing, you know, so you break a structure, price has to come within this area right here, which it does right here, comes in the area. We had like some sort of double top right here, bearish engulfing, and we can see that does it tap into the neckline where we have bearish engulfing right here, boom, 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 stop loss just above over here, targeting all the way 1 to 3 risk ratio. That's 1 to 4. This is like 1 to 3 right here, boom, and another trade, successful trade, boom, right? And so you could keep playing around. You can literally keep playing around. Another one, price, there's a break structure, didn't retest. Okay, cool. We can see that price is retracing. We've obviously taken this liquidity, taken all this liquidity right here, obviously taken all that liquidity out. Okay, and we see that price has you know, come down, broken internal structure, retest. Obviously we'll probably look at the 1 hour time frame. I wouldn't want to look at the 50-minute time frame, but just, you know, just to save time, probably get a Fibonacci tool, you know, practice around with fib to see, okay, why did it react at this area? Let's get a fib out. Okay, that's why, because it came to our 61.8 extension. Boom, simple. So now I know, okay, it came to our 61.8 extension. I now know. And then look, it goes straight to TP1 and TP2. So, okay, fibs are also good for this pair. And so you can play around, guys. Like when it comes to backtesting, play around. Obviously, this is not like a legitimate backtesting. Obviously, you want to build data and stuff like that. That's a whole nother level of backtesting. But this level of backtesting is going to help you so much, guys, when it comes to you trading, when it comes to you training your eyes, when it comes to you building confidence with your strategy and actually practicing the strategy. Yes, you can see the future. Yes, you know, this is not how the markets are, but same with backtesting, it's not always going to be legit, right? Because you're going through different time frames, you're going to miss out on moves, you're going to see the candlestick do a bullish and you'll be like, oh yeah, I would have entered there, slightly cheat yourself. Whereas this is that you already know that you can see everything, you know, you can already see everything. So for yourself, it's like you don't have to build data, but you can train your eyes to understand what this pair does and how you can become better within this pair, guys. Okay, I'm just gonna drink some water. But that's pretty much it when it comes to backtesting, guys. I don't want to go on and on and on about backtesting because it's very, very simple. You can literally backtest. I would recommend you guys to practice this. So your homework for today is every weekend, really, just do this. It makes you 100 times better than what you are. Trust me, guys, okay? So backtest, that's your homework. Every weekend, start doing this. Make it a routine. Do it for like an hour or two, and write down on your notes or something that this is what happened. This is how the markets moved, and so forth and so forth. This is the key level where it respected the most. This is the key level where it disrespected the most, and stuff like that. And you can keep moving on and building a rapport for this market and understanding this market. Okay, and then obviously in the future, if you would like to backtest, you can always use the replay tool, or I recommend is doing stuff live and direct and actually forward test and actually use your data, because all of us want to back test, build that confidence up. And then when we hit losses in live trading, we're like, oh no, I don't know why I lost. Well, that's because you're not ready for the real charts. So in order for you to be ready for the real charts, what do you need to do? You need to forward test, understand your emotions, understand how you are as a trader, because when money is not on the line, it's easy to trade. As soon as money gets on the line, it gets harder. So forward testing is always going to be the best thing ever. Obviously, backtesting with the replay bar tool or backtesting like this is good, but forward testing is always going to make you have better results. So if you are a trader and you want to prove to yourself that you're a good trader, take 3 months of your year. That's only one quarter. All you need is like 3 months of data to prove to yourself if you're profitable or not. Why do I say 3 months of data? Because you got 1, 2, and 3 months where maybe 1 week or 2 weeks you might have been not profitable or whatever it was, or you might not trade every single day or whatever it is. But 3 months is like the sweet spot. Anything more than that is greater. The minimum should be 3 months, okay, to prove to yourself if trading is good for you. If you are having a bad trading few months, that's your data. You got to improve it and keep improving it. Live trading. Don't use backtesting data to prove to yourself that you're a good trader. That's not how it works. What you need to do is use forward testing data to prove that you're a good trader, and use back testing data to help you with your forward testing data. It's as simple as that. Back testing is like playing scrimmages and playing practice games with your teammates. Forward testing is actually playing the game. You always have the best results when you're playing the game. You know, when I used to play basketball, my coach used to always make me watch like my in-game video of the game when we're playing live, but he would never record the practice. Why would he not record the practice? Because the practice is to train you to become better. The real is where you can actually see your mistakes and fine tune it and become better. Okay, guys? But that's pretty much it for today, guys, in today's boot camp. If you guys like this video, make sure you like it. Comment down below if you understood this backtesting. If you feel like I've rushed it or I kind of confused you or anything like that, comment it down below and I'll respond to you. Share this to as many traders as possible, guys. And if you'd like to join my community, make sure you click the link in the description below. And I'll see you guys tomorrow.